Colleagues, it's exactly 2 minutes past 2, and welcome to today's webinar. And thank you for joining us. And today's session will be exploring scenarios for South African economy in 26 to 2030. The focus will be on country's possible growth path and key reforms that can be used. And our speaker today, we welcome Dr. Roy Havemann, who heads up the Impumelelo Growth Lab at the Bureau of Economics Research. He's got an extensive experience from National Treasury, joined National Treasury in 2002 in the macroeconomics policy team. And then from 2009 to 2020, he was with National Treasury still at the financial sector policy team. In 2020, he was appointed Deputy Director General at the Western Cape Treasury Provincial Government, where he was responsible for Western Cape's budget and municipal oversight. He also has a book out on growth and number of academic articles on economics. He has done consulting work with the Presidency, Treasury, Eskom, and Sonrail, and Transit and other public sector entities. He has a PhD from Stellenbosch. And without wasting any time, I'm going to hand over to you, Roy. You can take us through your presentation.
Cool, thank you very much, and good afternoon, everybody. It's nice to see many familiar names. I can't see the faces because I see everybody's cameras are off, but it's really nice to see a whole bunch of familiar names. And thank you very much for having me on a Friday afternoon. Would have been cool if we'd all been in Stellenbosch chatting about this topic. But without further ado, let me talk to you about what we've been doing at the BR about growth, and particularly around scenario planning. So as I was introduced, I was obviously at the Treasury for many years, and then at the Western Cape government from 2020 to 2023, looking after the budget and municipal oversight. And I think that influences a lot of what I'm going to say today in terms of what I think can be done to get growth moving. I'm now at something called the Impumelelo Growth Lab, where what we do is we put out research and information that we hope supports both Operation Vulindlela and the economic reform program generally. As those of you know, I am a Operation Vulindlela evangelist, and we're going to put out some more stuff in the next few months around what we think is going on there. So the big question that I've really posed here is, how do we reignite investment in South Africa? So a scenario planning exercise, I mean, I did scenarios from the Treasury, when I was in the modeling team, which, as highlighted, was 25 years ago. And it's not difficult to get different scenarios depending on different assumptions. You just move some things around and you get different assumptions. The real question is, how do you get those different assumptions to work? So how do you get things to be different that cause growth, and what are the things that can cause growth, if that makes sense? And I take this question from an investment perspective, and I'm actually going to ask the question, how do we get investment growth to rise? Because I think that the key way that we think about how we can get growth going is that we can get overall investment to rise. So what do we know about investment? I've got some facts. Why is investment being so weak? And then what can be done? So some facts about investment. Investment has contracted since 2015. On the left-hand side there, I've got different periods, 5-year periods of investment growth, and you can see very clearly that during the Trevor Manuel, Tito Mboweni, Mbeki years, the great reforms of the 2000s, investment growth was very strong. Since then, of course, investment has gone negative. One of the most scary graphs is this one in the middle, which is real investment in just the level of real investment. And what I do there is show that the level of real investment is lower than it was in 2015, which is investment peak. And the investment to GDP ratio is near the lowest in history. So COVID is obviously the exception. Investment GDP was a little bit lower than it is at the moment, but that doesn't really count. And the only other lower period in our entire history is actually 1945, which I don't have here because I started in 1950, and that was just after the Second World War. So we really are actually in an investment to GDP crisis in the sense that we have this incredibly weak investment environment. There was some indication last year that investment is slowly coming back, but it's still the overall negative contribution of investment to growth. And how that feeds through to the economy is in two ways. The one I call the mathematical way, which is that if you remember first year economics, it's growth or output is C plus I plus G plus X minus M. So it's consumption plus investment plus government spending plus exports minus imports. And so if I, which is investment, is negative, then of course growth is just negative. That's like the mathematical impact. But there is another impact, which is what we call the supply side of the economy, which is where we think about growth. For those of you that did economics will remember things like the solo growth model, which is a very straightforward approach to growth, which says that underlying structural growth is driven by technology, capital accumulation, and labor. Capital stock, that is the amount of capital stock that you have in an economy, is obviously a driver of the supply side of the economy. It allows the economy to grow. So that's the other side of the story. So investment is amazing because it both adds to your mathematical growth calculation and it adds to your potential growth or your ability to grow. And that's why this capital stock growth problem is so significant, is that as you can see then, it's not really a surprise. Capital stock is just the accumulation of investment flows. So that has kind of slowed significantly. But what's the most scary thing there is that actually the productivity of that capital stock has declined quite significantly. So every unit of capital stock that we have out there, what I did there is I did a very simple calculation. I did gross value added. So that's the amount of value added in the economy divided by the amount of capital stock in the economy. And that basically shows that the productivity of capital stock has fallen. It's a very simple measure. There's some issues with it, but it's a very nice, rough and ready way of explaining that. And then on the right-hand side, what I do is I do that by sector, because we have data on gross value added by sector and we have a capital stock by sector. And the really interesting story there, and it's really not a surprise, is that the driver of this huge collapse in capital stock productivity has been this extraordinary collapse in the productivity of electricity capital stock from 2008. And we all know that that's related to an enormous amount of capital being directed into Eskom for the build program of Medupi and Kusile, and we didn't actually get any value out of that. So when Stats SA calculates the value added from the electricity sector, they can't find any, but they can see that there's been all this capital stock. So that just basically shows you that the gross value added per unit of capital stock has more than halved in the electricity sector. So we're sitting with huge levels of capital stock there, but not very much coming out of it. Of course, the hope is that as Eskom's underlying performance improves, that the capital stock that we've invested in Eskom will improve. The other falling one is construction, and that's just simply because the construction sector has been very weak. Also, as partly as an investment problem, and mining. Interesting enough, agriculture has been doing quite well. We have a lot of different indicators that suggest that agricultural productivity has picked up. And the finance and real estate sector generally has done quite well in South Africa. My theory, and I haven't really proven this yet, I'm still going to try and give it a shot later in the year, is that one of the reasons why finance real estate is doing so well is because the economy has become very anti-capital. So what I mean by that is electricity shortages, for example, make it very difficult for you to get value from, for example, manufacturing, because you can't build manufacturing. And so our comparative advantage is actually shifted away from where it used to be, which is low low cost electricity to sectors that actually don't use electricity and don't use water. And so the comparative advantage of the economy has also been dragged away from those sectors into finance. Anyway, what I do here is I did a paper last year on what I called Accounting for South Africa's Significant Growth Deterioration, where I asked why on earth has growth collapsed so significantly. And I basically do the solo decomposition, which is a very basic, straightforward approach to thinking about how the world fits together. And I don't think I'll surprise you by telling you that really the gray bars there are, sorry, the gold bars there are capital stock, and capital stock accumulation has not happened. And so that has led to structurally lower growth. And that's really, I don't think from what I said before that that's going to be a particular surprise, but really the idea there is just that that this lack of investment has actually really weighed on our potential growth in the economy. Some interesting other things that I picked up along the way. I've been just doing some deep dive into investment. Like I said, services are doing quite well, and they're probably doing quite well because other sectors are struggling. And we did a big paper on mining and some of the constraints to growth in mining, and we've shown both regulatory constraints and the electricity constraints. And in the old pre-2010 period, or even before that, historically, most of investment has gone into mining. But what we see now is that actually most of the investment is going into the services sector. And interestingly, if we look at the breakdown of what types of investment, a lot of it's going into ICT, suggesting that companies when they are investing in computers, they're investing in machines, and they're investing in research and development. They're not investing in residential buildings. We've seen a negative contribution to that. And they're definitely not investing in non-residential buildings. And that's very consistent with kind of what we see from other surveys. So the BER does a lot of surveys about building construction, and we definitely see that there has been a collapse in, for example, building of office accommodation and non-residential buildings. It has a little been held up by public corporations, but not as well as obviously in the 2000s, where growth was positive across all the sectors. This is, you do it by sphere, so general government, private, public corporation, and total. And there we see that actually it's kind of been held up a little bit by public corporations, which does also reflect a lot of this drive towards investment. Okay, so all I've tried to tell you there is that investment has been very weak. And so now the big question is, why has it been so weak? So you can dig a little bit into theory. Some guy called Ben Bernanke wrote a paper, a PhD, where he talked about investment decisions and why firms invest. And I think he knows what he's doing. So I've kind of relied heavily on his theoretical ideas. There's some other really nice work by Jorgensen and Nicholas Bloom on uncertainty. But essentially, the literature tells you that theoretically people invest under three conditions. The first condition is expected demand. So firms invest when they expect higher future returns. If investors expect stronger future profits or higher economic conditions, then equity prices rise and Tobin Q increases and investment follows. Tobin's Q is a way of is the ratio of the market value of a company's assets. So if the market value of your assets, that's what you can get for them if you sell them, rises compared to how much it costs you to replace them, then in a way, your net worth rises. So when share prices rise, Tobin's Q rises because the market value of the company rises relative to what it would cost to replace the company. And then people are like, oh my gosh, this is fantastic, and they invest. The second big thing, and this is really quite a straightforward idea, but the idea really is that investment decisions are often irreversible. So if you think of your own life, are you going to buy a house? You're going to buy a house if you're probably going to have to stick in that house, and the average time a person lives in a house that they've bought is about 7 years, maybe even 10 years. This is going to be your life for your investment decision for quite a long time. That applies not only to people, but also to companies. So investment decisions are irreversible. Once capital is installed, it cannot be fully recovered. You can't necessarily get your investment back. And so very obviously, if there is uncertainty, and uncertainty here is defined by something we call Knightian uncertainty, which is basically the idea that you really just can't predict what's going to happen in the future. If you have any uncertainty about, future demand, or maybe what prices are going to be, or what's going to happen to policy, then firms prefer to delay investment until more information becomes available. And that's very straightforward and obvious. Is really what Bloomberg also talks about, is that people actually just wait. So if they don't kind of know what's going on, they just sit on their hands and they don't invest. Often that means that cash accumulates, and that's also what we've seen, is we've seen large accumulation of cash on corporate balance sheets. And then the final one is obviously the interest rate. This idea that the return that you get from investment is really compared to what it costs you to borrow that money. So the marginal product of capital, which is a very fancy economics term for the return on your investment or from one additional rand, if that is more than the cost of your capital, then you can invest. You can get a gut feel of what marginal product can be by looking at profit, and you can get a gut feel of what the cost of capital is by looking at the real interest rate. And basically, this is very obvious, I think, but it's an interesting way of thinking about it, which is that the higher the interest rate is, the real interest rate is, so the interest rate adjusted for inflation, the lower investment is. Those are kind of the three big categories of how we think about investment and what drives investment. Okay, so the going back to that, all I'm going to tell you is that in every single case, we're not doing very well at the moment. Expected demand is weak, certainty is weak, and the real interest rate is high. So here we go. This is weak expected demand. We do a survey. The BR does a survey, a business confidence index. We actually ask people, how do they feel about the economy? It's very important. It's about how do they feel. It's a very behavioral economics kind of approach to life. And we ask them, how do they feel? And the interesting thing is that they've not felt very great about the economy for quite a long time. But in the last few years, they're actually feeling a lot better. They've gone from that blue line there has improved over time to nearly zero, and so has the orange line. This is very much in line with a lot of the reforms that have happened in the last few years. The view that electricity problems are going away, that there is progress on the reform agenda, logistics are doing better, slowly but surely companies are feeling much better about the economy. And we have something called a business cycle clock, where we put different things together and we kind of get a sense of where things are going. And that is also showing that things are looking better. Now, I prepared this presentation before Trump invaded Iran. We are getting our next business confidence indicator actually in a few weeks' time, and we're going to release it at our conference. We haven't seen the numbers yet. We are a bit worried that actually things were really looking quite good. The budget was fantastic. The change in the inflation target was great. Business was feeling very positive about the universe at the beginning of the year, but obviously, this huge increase in petrol prices has made people feel quite worried about the universe. So we'll see if that's still true. The other thing is political climate. So we do a survey we ask people, how do they feel about the political climate? That's on the right-hand side. And this is the percentage of people that feel that the political climate is seen as a constraint. And there what we see is that the political climate as a constraint fell to the lowest ever levels in the mid 2000s. I think people were very, particularly, I think that correlates with the ANC getting around 68% of the vote. Policy was very clear. It was very clear, there was very clear fiscal policy. The fiscal policy outlook was completely certain. The monetary policy outlook was very certain. Economic growth reached, if I can remember correctly, in about 2005, 2006, 5%. And I always tell the story that I was in the macro modeling team at the time, and we used to forecast growth of 5.5%. And Minister Manuel called us in and shouted at us and said that we were overly pessimistic because growth was going to be more than that. And he turned out to be right. Actually, we got growth of 6% in 2006. So politically and economically, things people were very happy. And then obviously political certainty deteriorated over time and then improved significantly again from about 2018 and dropped when the GNU was formed. I think there was a lot of concern about uncertainty just before the elections. Recently, it's popped up again, and we're going to see again how people feel about the political environment as we head towards local government elections. And then the final thing has been about the rise in real interest rates. So that on the left-hand side is the real bond yield. So that's how much we pay on our interest over time. And if you take out inflation, you see that over quite a long period of time, the real bond yield has risen from the period of about 2012. It was actually close to, it's very small on my side, but obviously we've seen bond yields rise quite significantly. They came back down again at the beginning of this year, but they've gone back up again as a result of the Reigniting crisis. But essentially, this story of this really slow, from about the late 2010s upwards, the slow deterioration. And then we also ask manufacturers if they see credit as a constraint to investment. So we just ask them, do you think credit is a constraint to investment? And we say, how many of you think that? And it's really interesting because that follows the real bond yield, which is sort of exactly what you'd expect, which is that the higher real bond yields are, the higher the costs of borrowing in the economy, because the real bond yield reflects how much money is in the longer run, how much 10-year money costs you. And so if the Treasury borrows from the same markets that the ordinary businesses borrow from, and so if the Treasury faces a high bond yield, it's probably everybody else faces a high bond yield. And then the final thing has been this significant regulatory burden. So this is a production market regulation indicator, and the OECD did a big, came out last year, and I did a big thing in Joburg with the Treasury and a big thing with us at Stellenbosch, and highlighted the fact that on their indicator, regulations are very, very, we have a very significant regulatory burden in South Africa. And so that has made it difficult. Okay, cool. So I think this is kind of stuff we all know, but that's not really why we're here. We're kind of here to think about what can we do to kind of get the economy moving again and get investment to return. So I said high real interest rates. So those of you that know me know that I am of the school of thinking that is, and I see some other colleagues right here that might disagree with me, but I'm happy to have a discussion on this, which is that weak fiscal discipline and rising fiscal deficits have been a significant cause of the rise in the bond yield. And this higher interest rate that we've seen because the Treasury has had to borrow more and more, debt to GDP ratio has risen quite significantly, has been a driver of the higher real interest rates. I have a theory, but we're not going to get much into that at the moment, but that low inflation will also bring down real interest rates over the long run. I know the bank feels this quite strongly. I think on balance, they're probably right. But I think that one of the big ways we get the economy to move again is to deal with this problem of higher real interest rates, and that those higher real interest rates need to come from somewhere. that reduction needs to come from somewhere. We need to get the fiscal position better. Obviously, as you know, the Treasury has done exceptional work over a very long period of time on this, and I think not enough people are realizing the difficulty it has been. I mean, when I was running the provincial budget, the fiscal consolidation is very real. Don't know who's clapping at me. Which is that you feel the consequences of the consolidation on frontline services. And we need to think very carefully about how do we think about that. But over the long run, we have to be fiscally disciplined. And of course, regulatory costs are also a part of that. Demand, so how do we get the economy to move again? I mean, I'm sure my colleagues from Operation Impumelelo will tell you that the structural reform program has already helped with demand. I mean, the very obvious thing is that if you have electricity, then people can buy more stuff. And then the final thing, which is actually what I'm going to talk about today, is business confidence. So this is a really interesting thing. The BR is quite big on business confidence as a driver of investment. It's maybe because we collect the business confidence survey. We've done a lot of work on business confidence over the years. And we do think that business confidence is something that really can support growth. And we can have a long discussion about this if you know, these confidence boosting measures, we, you know, have talked about that in the past. But on balance, I think there's some confidence boosting measures that you can take in the short run that will probably help quite a lot. I really need to highlight that you can take confidence boosting measures in the short run, but you also have to follow through, and the results of those confidence boosting measures have to appear. And I'll explain what I mean by that in a second. Okay, so I'm not going to talk about interest rates. I'm not going to talk about demand, structural reforms. I'll leave the operation related people to talk about that. I'll leave the fiscal policy people to talk about what they can do about real interest rates. I've got a slide on it, but it's not really that interesting because you guys are better at this than me. Other than to say just really quickly that fiscal monetary coordination is very important, and that's why I think we're doing a lot better on this. And this is just a measure of the tracker, and I think, as we all know, slow and steady, we are making progress in Impumelelo. What I am going to talk about is these confident things that can happen. So what we did, what we've been doing over the last few months is a lot of engagement with business and industry and a whole bunch of different people. We also, as part of our business confidence indicators process, we allow people to just type in what they think. So we ask them to vote. Do you feel business confidence is better or worse? But we also allow them to type. Of course, when people are allowed to type and complain, they generally complain. So they're probably going to tell you all the things that they think are wrong and not all the things they think are right. But still, it's quite a useful piece of information. And what we do is we use these large language models, and we've calculated all the different things, and we've drawn pretty graphs of plotted, you know, what words do people use the most? Because we get thousands of responses. Then we've done a structured engagement process. We had a very big day with a lot of senior treasury people, presidency people, business people, and eminent economists at the end of last year. We've been dealing with a lot of CEOs, and we've kind of asked them, like, what do they think? Like, what? If they had to say what they think could be done. And 10 things came out as really important. And we've categorized them into 4. And the interesting thing about this, and quite importantly, and I think this is just to say, particularly for the Operation Impumelelo colleagues, is these are non-Operation Impumelelo things. So these are outside of the Operation Impumelelo things. We specifically focus on things that are not Operation Impumelelo. And The three areas are the five areas are criminal justice reform, public sector reform, procurement reform, budget reform, and SOE reform. And that's why I'm really glad that GTAC is having this discussion. I also happen to be a GTAC technical advisor, and I know that you guys are doing a lot of stuff on these areas. So I think that these are not going to be a huge surprise to you, but I found it really interesting that at about the same time we were doing all this work, the Social Research Foundation also did a survey of what are the things that South Africans really care about. Like, what do they not like? What do they want? And they said, firstly, they want jobs, which we can all agree with. But the second thing is they just don't like crime. They really feel unsafe. CEOs and business told us that they're quite worried about the criminal justice system. And so we've been working a lot with Dennis Davis, and we're going to put out some thoughts about what the criminal justice reform could look like. But that, I mean, this is not rocket science. A lot of this stuff has been done already. We've had huge, big commissions of inquiry, as we all know. The Zondo Commission of Inquiry and also Madlanga Commission. We all kind of know that these things, we just need to do them. And one of the things we need to start with is capacitating the National Prosecuting Authority. A lot of people felt very strongly that what we should make sure, and there has been a lot of work on this, but maybe it's something to think about in more detail, is how do you give the NPA more financial and operational independence from the department? Those of you that work in, seeing a lot of claps, which is great, is those of you that work with departments will know that that the relationship between departments and their entities are often very complicated. You do want accountability, so you do want the department to have oversight over the workings of not necessarily just the entities, but also the bodies that report to them. But you also want to make sure that the department, particularly if junior people, are not meddling too much with the work of important institutions. And so one of the things that came out quite a lot, and we discussed this with like senior constitutional lawyers, senior people that have been working in the National Prosecuting Authority area, is how do we make sure that the National Prosecuting Authority's budget does deliver on what they need to do? And how do we build a more operationally independent NPA as a really good, what's the word? A really good practical step. I don't think that's far from what we've thought about a lot generally, but anyway, that's a thought. The next one is the illicit economy. The commissioner of SARS was part of the process. Feels incredibly strong about this, the previous commissioner, and obviously SARS is doing an enormous amount of work on the illicit economy, and that needs to continue. Then under public sector reform, now the great thing about this work is that we finished a lot of it at the end of last year, and actually a lot of the stuff that we can recommend has already been done. So I kind of feel like we can tick it off and go on a holiday. But the public sector amendment bill has now obviously been enacted, which reduces the interference of the executive over the bureaucracy, which is great. But then, this thing that comes up a lot is regulatory reform. And one of the big areas there, and the OSCE has recommended, the IMF has recommended, a lot of people recommended, is how do you actually modernize administrative systems? And how do you just even ask when you're doing oversight, maybe we can have a discussion on this, how we improve monitoring and evaluation, is how do we make sure that entities like regulatory entities that issue things like water licenses, I can see Georgina says she should probably, I know she's very passionate about this. How do we just get them to do these things quicker? That is really the question. So there's some thought about a silence is consent rule, which I think is quite interesting. It's not necessarily the right situation, right case in all cases, but it's quite useful for many license applications. But how do we just make sure that these entities that have got important jobs and make licenses just do them quicker? Then procurement reform. I mean, I feel like I'm speaking to the choir on procurement reform because there's so much work going on in GTAC on procurement reform. We must discuss whether or not the latest procurement regulations go in the right direction on this. But anyway, that's a different discussion. But how do you make procurement more transparent and cost effective? That I think is something that I'm not quite sure if it's that cost effective at the moment. Budget reform, also don't need to tell anyone in this room about that. But how do we get state resources to unproductive? Then item 9, and obviously this is something you guys are working very hard on. We did a big paper last year on CETA reform. I know that is top of mind for many people in the Treasury. RAF reform, UIF reform. These are really big, chunky entities. We know the RAF has been in trouble and consumes a lot of resources. We know CETAs are in trouble and consume a lot of resources. And we know the UIF, well, the UIF is actually, oddly enough, does very well, but because it's got all this money, there's this mandate drift problem happening. So how do we think about this? How do we do expenditure reviews, or how do we do expenditure thinking in these big, clumpy categories? And then the final one is very obvious, which is state and entity reform. I mean, yeah, we should just get on with doing that. Very interesting. I mean, I don't think, these are all quite interesting and quite obvious and not particularly new things, but it's quite nice to have a list on 10 things to boost confidence. But then also turning these into sort of like sort of a program of action. All doable. Some of them more difficult than others, but all certainly doable. Okay, so now we had some fun. We got a cartoonist involved to look at what could the future look like. And like I said, modeling is modeling. You can envisage almost anything in the future, but we thought we'd have birds. We borrowed this bird from the Luma, I always get the pronounce the name incorrectly, in Lumuti Scenarios project. They have the same bird, maybe because we all have a love-hate relationship with this bird, which is the hardy-dar. And the hardy-dar is this big, clunky thing that talks a lot, wakes us all up, and muddles around, steals the dog food. At least that's what hardy-dars did before. For me, steals all the dog's food. We now have a system to keep the hardy-dars away from the dog food. And just talks a lot and doesn't do very much. That's kind of the world we think we have at the moment, is kind of the hardy-dar world. The other world is something called the marabou stork. This is perhaps the world we had under state capture. A lot of people said we should use a vulture, but I think vultures are actually quite good birds. They do a lot of good stuff. They clean up a lot. I don't think we should say that vultures are bad, but this has got those bad characteristics of the vulture. It's a marabou stork. It famously features in a book. So a lot of the people that we talk to have kids, and they say the 5 ugliest birds include the marabou stork. But it is a morass of corruption. And then the bird that we all want to be is the African fish eagle, which is an economy that takes flight, does decisive structural reforms, has growth, inflation, fiscal deficit come down, and leads to catches for the fiscus. These are just very cool ways of thinking about the future, right? What are the future thoughts that we have? Then I see lots of clapping. Thanks very much. It's quite nice to have people use the emojis because it's very nice. Feel sometimes one presents into the cloud. Then obviously these scenarios link into different economic scenarios. And we have something we call the positive scenario, which we call 3 by 3 by 3 and 3, which is that we see growth rising towards 3% in 2028 as a result of investment. Now, it's really interesting if you have a look at the numbers, that because investment, and that's going back all the way to the beginning, because investment has been so weak and has drained so much from growth, just getting investment growth rate to 0 actually has this mathematical impact on growth. If you get investment growth higher than that, then it has this mathematically positive impact. Currently, we had a very good year last year for the consumer growth. I think, if I remember correctly, was about 2.5%, 2.7%. So if you think about it, if you've got one component of the economy that's actually growing at like 2.5%, you get another part, which is the consumer. You get another part of the economy to grow faster. Then there's no reason why, on aggregate, the whole show can go up to above 2. And then you've got this behind the scenes thing happening, that the capital stock starts to rise, and then the economy starts to move again. And like I said, I was in the economics team when economic growth was over 5%. This can be done. It has been done. We have done it. I was at the Treasury when growth was so fast. I don't see why 3% is not possible with the right set of reforms and getting the right things done. So really, we think that this fish eagle can fly if we do all these things, and these confidence-boosting things around criminal justice reform, public sector reform, procurement reform, and SOE reform increases confidence, improves the risk premium, reduces low borrowing costs, and you get this flywheel effect. Part of that story is, of course, the fiscal consolidation, which really helps you bring down borrowing costs and inflation. But these things are possible, and I actually think we're kind of gently going in this direction. We just need to work harder, perhaps. And yeah, I mean, this is our scenario about the upside, where there's a foundation of OE reforms and the catalyst to growth. So, in conclusion, I'm just going to repeat all the things I said, that really the problem, I think, is this investment contraction, which has dragged down overall growth. There's an accounting part of it, like I said, C plus I plus G plus X minus M. There is a structural component to it, AKL, which is technology, capital, and labor stock. We can do big 3 items. We're kind of trying out some of these things, but we are going in that direction. Fiscal monetary coordination. I am a believer in the fiscal anchor, and I'm happy to discuss that. I've know there's a lot of debate within the Treasury on that, but I think that one of the ways that you get improved fiscal monetary coordination is actually through a fiscal anchor. Continue and accelerate OV, obviously, confidence-boosting measures, and then a target of 3 by 3 by 3, which I think will help focus the universe. Yeah, so that brings me to the end of my presentation. Thank you very much.
Thank you so much. Thank you, Dr. Havemann. With a show of hands, I think everybody is clapping for you. Your presentation was quite insightful.
Thank you. Thank you for all the clapping. I can see hearts and a whole bunch of stuff. Thanks. It's really cool.
Okay, and I think we'll take questions now, and I see that there are already 2 hands. Siraj. Hope I'm pronouncing your name okay.
Yes, should I go first?
I think on my side, you're the first person to raise up your hand.
Okay, great. So I've got a few comments. How much time are you going to give me to respond?
Let's give you 2 minutes, Siraj. Is that okay with you?
So I'll try and be quick. First of all, I think just to respond to Roy's thinking about investment and drawing particularly on Bernanke, one is that the supply side mainstream models are just not effective. If you do a horse race econometric exercise and look at all of them, they all perform extremely poorly, and none of them actually can get you the results that make sense. The Tobin's Q assumes that if financial markets are efficient and properly cost assets, and we all know from the global financial crisis and other things that that's bullshit, okay? So you need to think more differently about it. But also, if you're looking at business confidence, you're speaking to the top 1% in the economy. You're not speaking to the people. I know you referred to people wanting to get away from crime and want jobs, but generally what business people want and what the population wants in this country is racialized, and it's very different. And South African economy, if you look at the Competition Commission's reports, is one of the most concentrated economies in the world. We've got extreme concentration. And so that drives investment in a certain way. It drives an extractive economy, and it takes money out of the economy. And so if we want to understand that period of 5% growth that you spoke about, that you're so proud of when you were at the Treasury, a lot of that was driven by a shift and a financialization of many of those large corporations. And much of that money was extracted and put into global financial markets. The second thing that happened was that the increase in liquidity and the inflow of short-term hot money flows into South Africa flowed into consumer debt, and we had household debt-driven consumption. And if you were to disaggregate where investment happened during that period, where investment actually only grew about gross fixed capital stock only grew about 4% from 2003 to 2008. The increase in debt, which over 30, probably 40% of it was household debt. So money extended by all monetary institutions to credit extended by all monetary institutions was about 22% in the same period. So a lot of that money was going into speculative and debt-driven consumption things. So that 5% growth was an aberration. It can't happen because the middle class are over-indebted. They tried paying off their debt, but there was a shift in the banks from lending mortgage debt to credit card and other unsecured debt. And so even though they've paid down their debt from about 80% of disposable income to now 70% of disposable income, maybe a bit higher since COVID, they actually haven't been able to save. In fact, the savings has been negative for households on average for most of the period. So I think when thinking about who we speak to, when we want to look at confidence, we actually need to look at the whole population and actually have a much more demand side driven approach to economics and macroeconomics particularly, and to realize that in order to grow this economy, we actually need to redistribute and put money into the hands of the most needy, below at least the top 1% that's in part of your surveys. So let me stop there. I've spoken probably for more than 2 minutes, but I think I've made some of my main points. Thank you.
Thank you so much, Suraj. And I think I'll take Landiwe, and then you can answer both Landiwe and Suraj. Dr. Harvard. Landiwe, you can come in.
No, thanks. My question really was far shorter than the previous one. I just wanted to understand more. If maybe Roy could just unpack what is, one of the 10 factors I think that he's mentioned, concern of the business confidence, or what needs to happen, is a transparency in procurement. I thought I read it as such. Clearly, I think I'd like to understand that if you could unpack that, what exactly is meant in that particular block. Thank you.
Thanks, Landiwe. I'll give a chance to Dr. Havemann to respond to the two questions.
Yeah, thank you very much. And I think Suraj and I have debated this topic many times over many years. So thank you very much for your comments on that. I was very curious. I mean, we also, by the way, survey, we don't just survey big businesses. We have a very big survey. It includes small and medium enterprises, ordinary business owners. And like I said, I was really interested to see that the Social Research Foundation's survey actually showed very similar things to what we were saying, was that what is actually holding back growth, and this is not really for us, maybe we're economists, maybe this is not really our area of expertise, is actually criminal justice problems. So people feel unsafe. They don't want to build small businesses. They don't want to invest because they feel unsafe. That's a completely different discussion about redistribution and should the fiscus redistribute. It's actually a discussion about how do we make our country, or how do we make our criminal justice system deliver on safety and overall crime and reduce crime and corruption? And I don't think we just, hopefully don't disagree, unless you think, Shiraz, that we should have more crime and corruption. I'm not sure. I'm not sure if that is such. That was, I think, what the most striking finding was from this whole survey was this. Yeah, and I agree with you about white collar crime. I'm certainly not defending white collar crime. I mean, I think that, but I'm not quite sure, how that makes it okay if there's white collar crime. I don't know why that's okay. And I think this is what was really interesting for me is if we're going to do confidence boosting measures and if we're going to do proper the next phase of reform, how do we think about that? To the point that about the model of growth. So I know that you've argued on many occasions, and we've been in many forums where we've discussed this, which is that we should have a much more redistributive state. Spending should rise. Unemployment is higher today than it was 10 years ago, despite debt having risen significantly. We have tried an experiment, in my opinion, of expansion in spending. We've tried an experiment of rising tax to GDP. Tax to GDP has risen quite significantly over the last decade. Debt has risen over the last decade. Spending has risen over the last decade. Even longer than that. And when I say the last decade, I actually mean even pre-COVID. So if you go back to, say, 2010 onwards, redistribution has increased significantly. Half of South Africans are now on a grant of some description. And growth has actually declined. So, I can understand that the argument that, we should be, that there should be that somehow if we redistribute or we increase spending or we increase the size of the state or something like that, that we will be better off. But we've tried that. And I think we've failed in the last 15 years. I'd be happy to discuss if you think we should have gone faster or spent more or raise taxes further. But, there's a lot of evidence coming out that even the increase in personal income tax that I was part of, so I will take responsibility for it, is the significant increase in personal income tax in the late 2010 period has actually led to a fall in revenue because, as you rightly point out, as soon as you try and tax people, they just move their money around. And we are increasingly struggling to actually raise taxes because I think there's a tax morality problem that has seeped in as a result of people being worried about spending. Anyway, so I'm happy if you want to come back. I'm so happy to discuss it further. As I'm going to procurement problem. I know we probably disagree. Oh no, we've had lots of good discussions about this. So, okay, then on the procurement problem, I think so. At the Western Cape, what we did during COVID, and I think a lot of other provinces did, Gauteng also did it. I know it's definitely on the horizon and has been tried out. Is and a lot of it's being done is obviously just more and more transparency. So, to some extent, and this you have to do quite carefully because obviously some information is sensitive. But the more we know about tenders and the process, the more I think, so you can go for an extreme, which has been tried. It doesn't always work, but like an extreme approach to transparency where every detail of the tender is published and every single person that tendered is published and every single tender document they submitted is published, and then that puts shines the light on the process. Obviously, a lot of the reforms have been in that direction, and obviously the development of the central supplier database has been fantastic, and so forth and so forth. So we're basically saying, I think, keep on going. I think that was the feedback from our surveys, is that more of that is great. Then Yes, I agree with Teresa. I think that's a really nice way of putting it. That, the interesting thing, and I don't want to harp too much on, because it was an interesting period, right? I mean, Shiraz, you're completely right. It was, it's easy to say that we grew at 6% in 2006 and that, we were doing everything right, but obviously the globe was doing everything right, and then discovered that they were lending too fast. So maybe growth should have actually only been 4% more sustainably. But an expansion in the fiscal envelope does allow for more redistribution. Then Anthony's question about the Constitutional Court ruling today, possible potential impeachment. Yeah, I have quite a mixed set of feelings about this. I mean, on the one hand, I think it shows that we have a Constitutional Court that is incredible. I was reading the summary of the judgment, and it looks like there were 3 different sets of opinions, 3 different judgments written by 3 different groups on the court. And they all concluded the same. Well, there were 2 sets of agreement and 1 set of disagreement on quite technical matters about whether or not the Constitutional Court has the ability to hear the matter, and then how they feel the matter should be resolved. But like if you look at the US, maybe I shouldn't be saying this too loudly, but if you look at the US and the politicization of the court, that's like really worrying. We don't have a political court. The court just found on the merits. And, that is great. I mean, if the president has obviously done something wrong, then the president should be impeached. And I think that is good. Upcoming local government elections. I mean, so I think business confidence might be affected by a change of president because it creates more uncertainty. But I guess it is also the consequence of having a court that does the right thing. Local government elections are obviously really top of mind for business confidence. I think what's going on in the cities is very important. Investment for what, for whom, and under which institutional conditions, and what employment intensity much of South African investment has historically flowed into. Yes. So, and there I agree with Shiraz. And I think that the thing that we have, and there was a great growth conference actually a few weeks ago, and one of the papers that came out of the growth conference was the idea that our competition commission should focus again, must go kind of back to its roots and say, how do we break down the concentration? I completely agree with Shiraz's concentration point. What happened, particularly during high apartheid, obviously, as we all know, is that white business, particularly, obviously, became a lot more concentrated, and this has had very big, I think, long-run growth consequences. I'm a strong believer in smaller, nimble, more competitive firms, and I think there's a lot we can do. To get rid of concentration, a lot we can do to stimulate non-capital intensive sectors. And yeah, I mean, I think the interesting thing is the developmental state, I think, is a complicated topic. But we have seen South Korea do really well in terms of directing their big companies to build the country. And I think there has been some talk about a social compact. But I think fundamentally what you need to do is you need to start rethinking about how the Competition Commission breaks up these still large monopolies in the economy. And that, I think, will also unlock investment. How does the current geopolitical... Great question. So we did all these scenarios before the Donald Trump invaded Iran. I mean, he obviously invaded after the day of the budget, and it kind of turned everything upside down. But, one of the structural features of this economy is how much diesel we use. So if you look at the diesel consumption numbers, and you look, where does diesel go? A large component of where diesel goes is on transport of goods from eThekwini, from the port up into Johannesburg, up the N3. A lot of diesel goes into transportation of goods. If we had a working railway system, a working logistics system, we would not be using diesel for those events. We've kind of made ourselves overly reliant on, and if we obviously had more, had less reliance on coal for electricity generation, and if we had a mining sector that could respond to commodity prices going up by investing more and building capacity, so I think we are more fragile as a result of we are quite fragile, and that means that the geopolitical stuff impacts us. Okay, their hands up. I think I've covered
Yeah,
everything.
we've got a hand from Tsoteti, and then after that we'll take Georgina. Tsoteti, you can come through.
Well, thank you, ma'am. Yeah, I wanted just to check something. Government some time ago, we had what you call 14 confidence boosting measures. And before that, there was 9-point plan. Now you've got OV, right, with the National Electricity Crisis Committee, National Logistics Crisis Committee. These are all things that, a private sector keeps on saying government should do so that they can obviously invest more, grow the economy and employ more people. But why is not happening? Because now what you just presented, these 10 ones, I mean, it's more like we are repeating the same that have been said in the past, and government is forever doing some of these things. So one is somewhat tempted to agree with Professor Siraj, because my question is, why are we not seeing movement on the private sector side to actually address some of these things? Because let's be honest, government can't do much, whether it's employment or growth. Some of these things must be driven by private sector, and we are not seeing any movement on their side. Thanks.
Yes. Yeah, I mean, I think these are things that, I think these are confidence measures that I think we should make progress on. So, I think a lot of these things are already in train. So, like, for example, like I said, a lot of things are kind of being ticked off. But the things like, for example, making the National Prosecuting Authority better, making it better capacitated, I think will help quite a lot. I completely agree with you. These are things that have been on the list for a very long time. How do we think about actually getting them done is the question. And an Operation Vulindlela is very clever, because what it does is it's a unit at the presidency that says these are the list of priorities, and the president himself is going to drive this list of priorities and get them done, which I think is the way we need to increasingly think about these other reforms. That helps. Yeah. Georgina?
Great. Thanks so much for a very engaging presentation. Even though I am on the OV team, I'm not necessarily going to ask a question on reforms. But last year, when the OECD did the South Africa country survey, there was a very surprising result or insight that I wanted to maybe point out. They identified South Africa as being very low in terms of product market regulation index. And I found that quite a surprising feature. We actually rank as one of the most overregulated economies in terms of that index. We're worse than Brazil, we're worse than China, Indonesia, Mexico, Turkey, so emerging markets as well. And our score actually hasn't improved since 2018. So very interesting that kind of data, which is, reflective of what it means to operate a business in the country. It's not, the ease of doing business kind of index. It's slightly different. And the kinds of things that they list as being problematic is not having a public list of all the permits and licenses it takes to start a business. There's no rule that says that government has to respond in a specific time to certain applications, approvals being granted. So a whole bunch of what we would typically call red tape. And I just wanted to get your perspective on whether red tape and this kind of data that's coming out of the OECD survey is really a constraint on growth. It's not necessarily something we target in OV, but I did find it a very surprising result from the OECD survey. Thanks.
Yes, I mean, I think so. We do this, like as Ross says, maybe we also our surveys do go to, but I mean, they go to all businesses, and this comes up quite a lot. People complain about the time it takes. I think there's a question about to what extent there are too many regulations, and we could argue that sometimes regulations are really important, and it's good to have strong regulations. But I think part of that being is that even if we have regulations, I mean, how quickly do our regulators respond to license applications? How quickly do they just do their jobs? And I think that is, I don't know if it's OV. It might be something that DPME should pick up on. And there's a question about to what extent we can link that to the MTSF program. But those are the sorts of things that we should be monitoring and making sure people are delivering on. And that might be a way of doing it. I'm not sure if it's OV's responsibility. I feel sorry for you, OV team, because sometimes you're given all the responsibilities. But you kind of maybe have to entrench that thinking in other parts of the state, I think. Anthony?
Thanks, Roy. And hello to you. Roy, your presentation really points to a particular direction when you make reference to the confidence businesses saying that the criminal justice system, the criminal justice system is what is being talked about, right? And so it is on people's minds. And if you dig deeper into what you are in fact hearing is concerns regarding procurement. It is a procurement problem within the criminal justice system, right? It's about how funds are being utilized. And so I would almost, and when we are talking about productivity, you say the productivity is what is really pulling down the growth and the investment, and you are mentioning electricity, construction, mining. Is it possible that the problem that is really impacting confidence in South Africa is the procurement system? Not necessarily the criminal justice is one area, it's one sector, but across the board. It is only that we are highlighting the criminal justice system through the Madlanga Commission that we are talking about the criminal justice system. Is it possible that the productivity problem that we have is directly linked to the procurement system and the application in South Africa? And if procurement in other sectors were to be investigated, you'd find similar inefficiencies impacting on confidence. That is just a comment. Thanks, Roy.
We kind of found that, I mean, also this is important that, and I think the point I'll get to Shakira's question now, is almost distinguish the two from one another, that in a way it's a criminal justice system. It's how quickly does the criminal justice system work if a crime is reported? How quickly is that crime dealt with? What happens? And this was obviously came up a lot in the grey listing problem because there were issues with when something goes wrong, is that passed on to the prosecutors? Do the prosecutors pick up on it, and do they take it forward? I think that was more the criminal justice system. The procurement reform is more about is how do we make the procurement system, as the Constitution tells us, both cost effective and transparent. Shakira, on the yes, I mean, I think that's a really good question. I mean, turkeys don't vote for Christmas, and it's very easy for business to point at government and say, you should do all this stuff. And it's very hard for business to say, well, we can do the following. And I think that's actually something to think about. Oh, you got your hand up. Do you want to speak about that?
Hi, thanks for this wonderful presentation so far. I love it. I think I just want to expand on my question a bit. I won't cover everything because I believe Professor Siraj has already covered a lot of my concerns as well concerning your presentation. But on the economic concentration aspect especially, for me, when I look at this particular page that you have on screen with 10 things that can boost confidence, it goes back to the question, confidence, boost confidence for who? So if I don't see the private sector possible reforms that they could also apply in order to boost economic growth. For me, now it's like I'm getting an answer on whose confidence we are trying to boost. Going back now to the economic concentration problem that we inherited and is very much alive and thriving. I'll go back. I guess the criminal justice reforms comes in as well as the public sector reforms. I believe you do know it's been proven in other developing countries that small and micro enterprises are some of the largest employment hubs, especially for young people. So if we fix, of course, the criminal justice system, some of these young people who have business ideas can be able to access the funding, the seed funding they need, which is usually not a lot, to launch some of these businesses, which can, of course, help arrest the unemployment rates that are growing. But there's now this problem of the criminal justice system, the public sector reforms, and according to me, private sector reforms should form part and parcel of this table as well. If you're going to have wealth concentrated on a few hands, they get to decide the direction. Yeah, I'll pause there. I believe you do get my point. Thank you so much.
Yeah, I mean, to go back to that, I mean, I think one thing I agree with you on, for example, is the concentration of the banking system, and how do we get a system? What do we need to do to make sure that credit is more available? Now, this is a very interesting slide because it tells you two different things. So one of the reasons why manufacturing credit is more difficult to get, obviously, is the real interest rate. But I did highlight the fact that the other part of the story is it is difficult to get credit because there are very few credit providers that specifically focus on small businesses. So even normal manufacturers, and this is like a range of manufacturers, and I mean, I think that's also, we need to get a way of how do we get small manufacturers that have got clever ideas and how do they actually get capital, are struggling to get capital. And I think that might go to the question about how do you, what are the private sector reforms? How do we, and it might be to better capacitate things like the Competition Commission to break up these large firms that are perhaps holding back growth. I'm not sure turkeys will vote for Christmas, but I agree on the concentration problem. And I think, it's like that's straightforward economics. So the more concentrated your economy, the slower it's going to grow. But what are the practical steps that we can take to reduce, to for example, create more competition? Does that answer the question? Oh, yeah.
Shakira, are you covered?
Yes, but I believe how you ended is very important for me, because now this goes back to the criminal justice system and the public sector reforms that are needed. I mean, there is already a few SOEs whose job is, of course, supposedly to fund such enterprises. Maybe part of the reforms would be to streamline that entire process so that the funding actually lands where it's supposed to and actually does what it's supposed to, and with measurable goals that we can all maybe see. I don't know. That's just my suggestion, but I'm largely covered. Thank you, Nobuntu and Dr.
Thank you so much. Thank you, colleagues, for joining us, and thank you, Dr. Havemann, for such an insightful presentation. And thank you
thanks
for
the great
engagement.
questions. And thanks for engagements. I really enjoyed it.
Thank you so much. And on the chat, I've put up a link to just rate us. How was the session? Thank you so much. Have a lovely weekend ahead.
Thank you.
Thank you. Bye.
Bye.
Thank you. Bye.
Thank you. Bye.
Bye.